right, guys, welcome to the second episode of Slap That Ass Podcast, the podcast by investors for investors. 2020 has been a record-breaking year for IPOs with over 400 launched so far and many more to come in December. There's also been a record number of SPAC listings this year, which is a process of reverse merging a company via special purpose acquisition company to list it instead of IPOing. In today's episode of Slap That Ass, we'll be discussing the IPO boom, the rise of SPACs in 2020, and what it means for the markets and your cash. I'm MartiniRita. I invest for a living. I live in Airbnbs. I'm a longer-term investor, and I come from a background of finance and derivative pricing. With me today is Millennial, ExiledInvestor, and RedemptionTrades. So who wants to introduce themselves first?
Okay, so I'm MillennialMotivator. For those of you that know me, you've caught me on Twitter, Twitch, YouTube, wherever. I work in digital marketing. I have for over a decade. I came to the market because I thought that all those years of understanding how people think and what they buy and why they buy it might help me in the market. Year to date, I'm doing quite well on that. So I'm going to keep at it. I'm not professional investor in any way, shape, or form. I'm newer to the market, probably the least experienced of everybody in this group, but I'm thrilled to be here, hang out, and talk dog shit when I can. So let's get to it.
And I'm ExiledInvestor. I'm a long-term investor with background in digital marketing, real estate, and construction. I've been investing for a little over 18 years, I think, and generally go for high-cap companies.
I'm Redemption. I ex-firm trader. My specialty is basically looking for flaws and inefficiencies and things. Sometimes it's, or actually most of the time, it's just kind of predicting what the dumb money will do.
Nice. So our first topic for today is the IPO boom in 2020. So let's think of kind of the bigger names that we've seen this year: Casper, Zoom, Lemonade, BigCommerce, Snowflake, Palantir, Corsair, Unity, Asana. So this will give you kind of an idea of some of the hype that's been happening this year. But let's review some general facts just to help us start to think and break down IPOs for this year. This year has seen 400 IPOs so far, 82% more IPOs than in 2019. It's the most IPOs since 1999, if anyone can remember that far back.
I can.
Can you? I wasn't trading.
No, I remember 1999. That's all I was saying. That's a lot of IPOs. That was the dot-com bubble. That was the dot-com bubble. That was all the dot-com companies. It was huge.
So the previous record was 486. So we're very close to that number. And so I kind of just wanted to start off there and think about, do you think we're going to see that many more IPOs through the year? And what do you think what do you think it means for investors now that we're at record-breaking levels of IPO?
Yeah, I think that we see this number of IPOs because the entire world went in the shitter for a month. And everybody that had been humming and hawing about whether or not they do an IPO to get public funding to get them through this, that decision was all but taken from them, right? It was, if you've been holding your breath on an IPO, now's the time to do it because you have no money coming in for the next little bit. The entire global economy is crashing. So get in on them IPOs now, boys. I don't think we see this continuing through 2021. I think this was a chicken with their heads cut off reaction. And looking at a lot of these companies that we are still awaiting IPOs from, guys like DoorDash, the big headline on DoorDash is still not profitable. Like Airbnb, 25% of their rentals not available. Wish, yeah, Chinese stocks. I hear those are going quite well right now. I mean, like Roblox. Roblox has its own issues as it deals with pedophilia and child pornography issues in the courts. Like the lineup of IPOs that we have, while they are bigger names, it's a who's who of dog shit company. So, I mean, for me, I'm excited. But for most traders, I think looking at these upcoming IPOs, there's a lot of dog shit to play in.
I'm inclined to agree. It just seems to be a great year for drilling the capital markets. Easy access to money. Everyone's looking for safe places to invest. There really aren't any outside the capital market. I mean,
Crypto.
Tell me if I'm wrong,
Crypto.
right? Unless you're a crypto trader, which I'm not. But it's where else do you go? I think we touched on that in the last episode. And
Yeah, we did.
it's just where else do you go? So yeah, definitely some. For me personally, some that are. It just echoes the 2000 bubble in a huge way, and it kind of scares me a little bit. But at the same time, it's liquidity's so high right now. And I know we're going to go on and talk about the SPAC craze, but it's just get to the markets fast, fast. It's that urgency to raise capital now. So what was really interesting for me this year is the guys that are so late to the party, like that, they've kind of missed that window. Airbnb is my example of that, where they should have done this a while ago.
Last year, they should have done this shit when they were whispering about doing it. Instead,
right? It's crazy that they didn't, but what a turn of events 2020's thrown at them where it might actually work out in their favor now. Like, oh, so staycations are going to be a thing. Cool. Like, it just seems like great timing for them. It's almost a freakish coincidence. But yeah, I mean, we're barreling down on December now, and it's you've got I think Wish is going next month, isn't it?
Yeah, Wish is next
DoorDash,
month, and then Robinhood as well. DoorDash should be mid-December.
Yeah, DoorDash horrible, but I mean
that their motto is still not profitable is nuts. Like their last PR that they dropped on their IPO that we've long awaited is, yes, we know that we've only been profitable in one of our last 4 quarters, and no, there's no sign of profitability in the near future, but we're still positive on the sector. And it's like,
don't you think it's a weird turn of events when restaurants and hospitality businesses are going out of business at an unprecedented rate, yet the guys who deliver their food are about to IPO? It just seems a bit weird.
I mean, it's kind of an irony turducken, really.
Yeah.
Like,
steeped.
It's not just that the restaurants are down. It's that even when the restaurants weren't down, these guys weren't profitable, right? It's not like they had a winning strategy. Like your business model was not raking in the cash before this, right? And there's smaller players in the industry, Postmates and Waiter, that are profitable because they took a small, scalable approach instead of let's just throw money at everything because we're a unicorn out of Silicon Valley. Like, I'm so sick and disgusted with the Silicon Valley IPO sunshine out of your farts bullshit. It's awful.
Out of your farts. Nice.
So do we think they're doing well? Like the surprise performers that have done well. So let's say because there's been a few, right? Unity and Unity's my example because I love their product and platform. For anything that isn't a AAA title, Unity is where you generally are going to build it. Huge for mobile, yada yada yada. But
just what a tech-flooded market needed was more tech.
They have a lot of the market share for a lot of things too, especially the mobile market. And like, if you guys don't know anything about advertising and stuff like that, the mobile ads that you can run on these things, it's huge because how many ad blockers do you have on your mobile device? Like there's almost nothing. So how many do you have on your computer? It's quite a few to choose from, but a
$40 billion market.
Yeah, no.
Yeah.
Yeah, I mean,
it can't just be me that sees that and goes, really?
Well, I mean,
there's a lot of those. Like looking at Zoom. Zoom's valuation right now is like, really, guys, come on. I understand that we're making a transition to a remote office, but this shit is not going to continue this run.
Can I bottom line that for you? Like, literally, I looked at the valuation the other day, and it's literally priced for 400% growth into 10 years.
Uh-huh.
Like, I don't... I don't know.
I think what it is that they're looking at it from the perspective of, or they're trying to present the perspective of, this is the market that we're in right now is just the U.S. market. Once the rest of the world starts onlining themselves, like India with their whole their whole move towards, like, moving them further into a technological age where everybody has a cell phone. They tried to get people to get they were trying to enable internet access to everybody. And I don't remember, and I can't confirm this right now, but they were saying that for like the first year or something like that, they were going to give free internet access because they wanted India, like all of India, to be connected to the web. I don't remember the full context of that article, but I just remember an utterance of that.
Yeah.
But I think that what they're thinking is that they still have room to grow. But from the other perspective, I'm not sure if you guys mentioned this or not, but I think one of the bigger reasons also why everybody was in such a rush to go IPO, especially now, wasn't just because they needed the capital raise and everything. I think it was also because they saw an opportune time where a bunch of people who are hoarding a bunch of cash, who knew nothing about it, who are bored. Like the news cycle is always focused on one thing, and them coming in and saying like, oh my God, this guy made X amount, trading this thing because the IPO, they're up like 100, 200%, and all the shock factors you can think of for marketing. They put that all together, and then because they're considering the audience right now is they're desperate, they're getting a free government check that they don't know what to do with after they buy their TV and everything. What do I do with this $1,200? Oh wait,
the stimulus play.
Yeah, this guy made took $100 and turned it into $100,000 investing in this one stock secret or something like that. They're gonna think that they can do this, and they're sitting on like cash that they didn't, like, they just got for free. Like, they didn't work for it, they didn't do any of it. So it's not like that cash isn't important to them. So they don't really have that attachment that they would if they were working long hours to earn that. So it's like, okay, well, I think the powers that be, what they thought was that, okay, well, there's like a ton of people there getting free cash. The allure is there because they're not working right now. If they just sell the dream that they can make money by IPOing, and it's a company that they're already a mainstay brand, like Unity, for example, or Corsair, for example, they'll be like, oh, I'm going to be rich. Although I'm a little indifferent on Corsair. It ran actually further than what I thought it was. I thought it would be, because I was comparing it to like MSI and all these other things that are actually listed in the Taiwan market, which didn't really do very much. But I think the reason why, and I'm just guessing here, but I think Corsair is technically overvalued right now. I mean, that's probably very obvious, because if you compare it to the other manufacturers who make RAM, Corsair is known for the RAM and other accessories, but if you compare them to the other manufacturers, then I think the most expensive one there is like $12. But look at Corsair today. What is it, like $50 now?
But that goodwill category, Redemption. Sorry, I had to throw that in there. Oh yeah, total addressable market. Well, let's expand on that. Let's go down the route of what do you think people or finance people do to their IPOs and their structures to convince people who may not know as much about financial markets to invest in them? What do they do to convince them?
Show them past performance. Is a huge one. Like, I mean, especially in 2020, right? Look at the to use the clickbait headline format. If you'd have just put $1,000 in X, Y, and Z this year, how much would you have made? And I think that's a huge draw for a lot of people. It's saying, hey, don't miss the next train when it leaves, and you're going to get that. They're going to use retail investors to. They're the easiest. It's where most of the capital and liquidity in the markets is coming from. Is they're just taking it right out of Robin Hood kids, right?
Yeah, so, that's the big one. That's the big one.
Yeah,
it's the ambulance chasers. The Robin Hood sector are ambulance chasers through and through. And I'm not saying that in a non-loving way, guys. I get it. There are a lot of ambulance chasers that are really good at it. But as always with ambulance chasing, you got to be first to the scene, right? Like you can't be 10th to the scene because you're not making the money.
If you're not first, you're last, Ricky Bobby.
Yeah, that's why.
And it's not just IPOs, guys. We've seen this. We'll get to it with SPACs, but we've also seen it with something called bankruptcies, right? Like there are certain things that people used to err on the side of caution with. IPO trading was for a very small group of investors and not retail traders, because IPOs took a shit ton of time, and you need to listen, and you need to deep dive, and you need to read reports. Nobody wanted to do that. SPACs were a nightmare because you get even less information than the IPO, and you had to come to a decision. Bankruptcies were a big red flag that we hoisted saying, stay the frig away from this. And yet the ambulance chasers hop onto these things one after the other, and it's no longer whether or not an IPO or a SPAC or a piece of crap bankruptcy like Hertz has any value, because you're no longer even looking at the company. All you're looking at is, I bet you a bunch of dumbasses are going to run into this thing. Yep, you too? Yep, okay, great. So should we get in early on that so that we can get out early on that? Absolutely. And this is what we see. The big guys are getting in early. They're getting in before the IPO lists, right? You look at SoftBank. SoftBank is expecting $75 to $85 a share on Airbnb. Like,
Yeah.
come on.
I mean, yeah, because they've got a great track record of late as well.
Well, it's kind of, so you brought up a good point, I think, which is the price at which private market investors get IPOs or get SPACs as in comparison to the public listing price, right? Which can also climb in pre-market, which you can see that, like, I love you guys, but sometimes you guys have Fisher Price brokers that don't allow you to trade in at 6 a.m. when it really starts, or they don't let you even trade that day.
Mine lets me at 4.
Or it's down. What was that?
Mine lets me in at 4.
There you go. See, redemption's on Interactive Brokers, probably, right?
Yeah.
Yeah. So, I understand there's we don't like the UI. That's what everyone tells me. But at the same time, sometimes you need a broker to do what you need it to do, right? And so I think it's just a travesty. It's just it's a fucking shame that all these private market investors get prices that are just kind of crazy, right? Like, I think for space, and we're going into SPACs, but I just want to say that they got it at 0.002 cents. Okay? And then space IPO'd at what, like $2 or something? Right? Like, are you kidding me? I don't know. It's like a huge risk shift onto the public market. And I understand that happens usually, and I'm probably going to get a comment, okay, that happens, Rita. Like, of course, private market investors get better prices, but it's a shame. I don't know.
Well, I mean, like, they don't know what to argue for because they're very unaware. And this is part of the ignorance debacle I always have with people, because you don't know that. Well, I mean, like, it's true. Like, you don't know you're getting screwed until you actually see something alternatively, because in Canada, for like the longest time, people are paying $5 to $10, even $12 or even $20 a trade. And that's highway robbery. That's per trade. Wow. And, this is also, like, there's one brokerage that is highly touted still that's charging like $5 to $12 per brokerage, per trade right now. And people are still mesmerized by that. And I'm just sitting here thinking, it's just like, I literally get paid sometimes to throw out my orders. So I don't know what you guys are, like, why you guys are touting this. And when I tell them this, I have to draw, like, I have to tell them why or how. And it's a very simple solution. I say, look at the ECN that you're shooting it to. If you're not getting a rebate for that, for being passive and all that sort of stuff, they lose me by the time I say you're getting screwed. They take it as a personal attack. They cut it off right there. They don't read stuff. They don't read past that, because I think at the end of the day, like, they just want a very simple, done for you solution, which, gives me an idea. I should probably just set up a side service that actually does this for you. It's very, like, minimal. I don't have to do anything. And anytime they screw up, they have to either call me, I charge them by the hour, and, I can monetize their stupidity just like these other banksters are monetizing them.
There you go. There's a disruptable business in itself. You'll be IPOing in no time.
Oh God.
Well, like,
So I mean, do we see this being enduring though? Like, so the ones even, I guess
No,
my question is,
way.
for the last 2 to 3 months has been, is this going to be something that endures through 2021, where the guys that, especially the IPOs that have performed well this year, the Unities, and I mean, I hate to mention them, but snowflakes. Are they just doing well because of COVID? Is it just a tech hype? Is it going to endure though? Is that sort of momentum that these types of stocks, like the EV hype we talked about, right? Or is that going to endure through 2021? Or is it purely just, is it a COVID 2020 play? Or is it something that we can, and I have real trouble answering that question myself. So,
Oh, for me, it's an
whenever
easy
the
answer.
powers
do
that
it.
be are feel satiated with all the dumb money flow coming in and decided to jump ship at some point.
have you ever known this beast ever be satiated?
Yeah.
Oh, I'm sick of making money this year.
I think the answer is real simple. How soon do we see a stimulus check coming? Because that's what fueled this retail trader pump.
Yeah.
Everybody got their check in the mail, and that's where the money went. Now, anybody listening think that Biden and his let's spend ridiculous amounts of money treasury crew that he just put together aren't looking to send out a big fat check to everybody? Anybody thinking they're not getting a check in the mail? Yeah, so unfortunately, I think the stupidity continues in and as of the check. Is this a long-term, this is the way the market will be from now on? I don't think so. I think you see people blow their stimulus check again, and then they're done, right? Like, the ammo is done.
Does that timing dovetail with, the vaccines and stuff that we've got coming down the pipe? The world may be getting back to somewhat a bit more normal in, let's say, Q2, Q3 next year. Is it?
I think
is
April's
it going
sexy.
to bridge that gap?
I think April's sexy for the market in a big way, because that's when that stimulus is going to get passed at the soonest. Is you'll see those checks in April. You'll see cruises, airlines, that kind of stuff in June. But I think most of the people are going to blow their load on that first check. I think April through June, you're going to see a lot of money in the market. And by June, the majority of them are going to have burnt it on some piece of shit SPAC or some China company or another hustle that's going on out there. Like the short firms are loving this season. They are loving it.
Oh, yeah. Oh, yeah. They really are. I was just listening to Carson Block talking about that, and there's a lot of shortable companies out there right now, and through to Q1, Q2, it's going to be rich pickings for them.
I mean, throw all the tickers you want up on a board and huck a dart at that wall, and you taking a short position against that over the next year is not looking ridiculous, just because there's so much that is overextended. Every day I pull up Shopify, I look at it and go, no fucking way. No way. No way.
I love that you all keep mentioning stocks that I have no problem with for full disclosure reasons. I usually buy.
And it's not that I don't like Shopify as a company. I love Shopify as a company.
Oh, I love them.
Just not at $900.
I liked them better when they were near at 1,200.
Nutty.
Of course you do. Of course you do. But I think
been brilliant. What can I tell you?
Oh, man.
But I think this attitude that we think that it's just retail investors, I don't. I think everyone's drunk on the punch bowl.
Yeah.
With the fact that yields are in the shitter now. Right. And when I say yields, I mean bonds, right? The boring shit that institutional investors must trade, to have their wonderful risk parity portfolios. And now they're deciding that they can't make the 5% that they've promised their pension fund or their fund, and so they've got to go hunting for yields. I think really that's the shift that you're seeing, because there's no way. I tried looking it up to see, and if you add up all the SPAC money, all the IPO money, all the huge move in SPY and stuff, that can only be produced by retail investors and institutionals. There's not enough out there.
Well, the thing is, we did see this like earlier in the year and stuff like that. what happened was that we saw market makers actually step aside because like all these retail investors were bulldozing them and they were getting killed. And if you guys don't know much about market makers, like they have an obligation to make a fair market, which usually means that they have to take trades that they don't want to take. So if they were to stand in front of like a bulldozer that is like at the beginning of SPACs and beginning of all this hype, imagine you are just a normal market maker sitting at watching VTIQ or whatever, sit at 26 or Nikola, whatever came afterwards, sitting at 26. Then suddenly you see this wave of orders coming through and you have to fill all those orders. You have to take the other end, or you have to try to match it, or you have to try to take the other end. No one's stupid enough to try to take the other end, but it's your job to try to make a fair market. What happened? Nikola jumped to what, $60, $80?
$80.
90.
Yeah. You are the market maker that is holding all those shares because you couldn't find someone. Yeah, because you couldn't.
Excuse me, I just pooped.
You couldn't pair that off fast enough, right? And what we saw was that they got pissed off, so they stepped aside. That's why we started seeing wider spreads, especially in the options market. Again, like we saw certain. Not
even that, they went bust. A lot of them went bust.
Yeah, during the VIX, but like for the VIX plays and stuff like that. But I think what happened was that something happened. I think there was a shadow change in rules to where they were allowed to kind of step away or widen the market to the point where it's not feasible for them to it's not feasible for a retail investor to really take that order, or if they're dumb enough to take that order, then the market maker will just kill them because of that wide spread that they have. I honestly think that it's not that the institutions are allowing retail investors to do are helping the retail investors doing this. I just think that they're not standing in their way anymore. They're just letting them do, like, they might need a little help here and there to where, I don't know, what's 100,000 shares to them, right? Like they just throw 100,000 shares. Someone on Wall Street Bets or one of these websites gets all like fanaticized by it. They make a post, it goes viral. Most of those people don't read past the first paragraph. They don't even read which means they don't read the prospectus. They don't read anything, any of the filings. And next thing you know, this thing just shoots up, and all it cost you was about 100,000 shares. And now you also know that these people don't have a semblance of any sort of risk or any sort of outs. And, if I was a market maker and I knew that people were coming in, I would have loved to have that spread between $20 and $90 for Nikola, because, they're going to bid this all the way up. They're going to fight with each other to bid this all the way up because there's no, the market was probably very thin back then. And right when we hit the peak, it's like, okay, cool. Let's pair off my orders with some of the other investors. The people who are buying this will have to sell it, so they'll sell it to me. I'll short sell this, and then I'll just take this all the other way down. I think what they like that's my point of view on how they adapted. I don't think that they're really like helping them. They're just essentially enabling them by not doing anything. That's the way I see it.
Yeah. It seems, kind of I think we've just got that overall air of fever pitch in 2020 where, doesn't, I guess even retail, even institutional has that sort of mentality at some point where, there's money to be made. What are you going to do? Not make it. So the market forces we've got at play are just too salacious to ignore.
Well, I mean, it's really been a historic.
People is greedy, folks. I know "salacious" is a tasty word, but we all greedy.
We are. I mean, what are you going to do? Is it like, how are you going to turn around and tell your shareholders, we made a moral play. We've made enough this year. Let's just leave it at that. Has that ever happened in the history of business or investing? No.
There's one person.
This is very much a for-profit industry, so
Buffett.
Well,
Bill Gates.
I mean,
weird. It's like Buffett's the guy you call up when everyone else is fucked.
Yeah. What's Warren say? Oh well.
Yeah, he's not gonna buy our dog shit. We're fucked.
Yeah. It's just, I don't know. It just seems to be that I don't know whether retail's driving institutional or vice versa, or whether it's just a market driven coincidence. But again, I have to keep going back. How I temper that sort of excitement is where else can you put money that's safe? If you're not into crypto in a huge way and gold effectively tracks SPY, this is the game we have to play effectively. So, and for me, I have to ask, how does that change going into 2021? And I still don't see that. Okay, so let's have a safe hold here for our cash and take some of the risk out. There's very little you can hedge against this with. For me personally, anyway. Like, I would love someone to come along and say, no, just put it here instead, or diversify over here, and you're going to have a bit more safety built in. But I just don't see it right now.
Well, when I mean, you're right. There's nothing to hedge with, because when I saw basically the risk parity trade die, right, and then I saw oil go negative, and I was just like, the fuck is going on? Because usually bonds go up when this stuff happens, and they didn't. They just didn't. And I don't know that anyone really, unless you're in finance, like really understands the enormity of the fact that relationship wasn't there anymore. It basically means that it's basically how everybody's retirement is built. It's based on a 60-40 bond split. And if that is broken, then what the fuck do you do? I mean, for all intents purposes, it's like we're all in and they're still doing it, right? They're still telling you 60-40 bond split, which is insane. If it broke in earlier this year, why are we should reassess. We need to maybe do the barbell or something else, like some long volatility. That's what we should be adding, honestly, is long volatility into our portfolios, because that's the only way. There's no, that relationship isn't there anymore. So that's where you have to be, in my opinion.
Mm-hmm. My jaw hit the fucking floor when I went to my bank and they went, "Oh, you're a young guy. You should really get into the bonds right now. You're going to see a great return on that 30, 40, 50 years from now." I'm looking at them like,
yeah.
What the, like, I understand.
Oh, yeah, Macy's bonds. Would you like that, Millennial?
I just can't fathom. So what you're advising then as a financial institution is that I get into bonds that are evaporating out from underneath themselves. And in doing that, I take all the capital that I could have put into one of the most lucrative markets of all time, and I just sit on it for 60 years. That's the sound financial institution advice. Great. I'm going to tell you to take that, ship it right where the sun don't shine. Like, there's no way. There's no freaking way. I don't care if you tell me, don't worry, the bonds will recover over the next 60 years. This insanity market where SPACs, IPOs, bankruptcies, lumber liquidators all look like good things all the time. Like, we get maybe 2-3 years of that before somebody cancels the party. Whether it's Yellen, whether it's the money train stops flowing, whether China decides to just undercut the entire Asian economy, no deal Brexit, who knows what ends it, but somebody's gonna crash the party.
Oh, that music's bound to stop sooner or later. But again, I mean, so for me, like my experience of 2020, I typically don't play IPOs unless it's a business I'm intimately familiar with and in love with, and so I don't buy into that hype. I play long term, right? So I usually let it go live on the markets and get that initial hype out of the way, and then let it find its price, and that's when I start to consider an entry. Normally, 2020 I've played more IPOs than any year previously that I'm aware of. It's been insane. There's maybe 10 IPOs that I've played, and probably another 10 that in hindsight, I don't FOMO trades I didn't make, but I would have. and there's ones that I was very close to playing that I ultimately decided not to. So Corsair, I took my traditional approach of, it's too big of a name to ignore, but also it's going to get that hype. And I priced when we did due diligence live in Discord, and I came out with the price of, I set a target for, I think it was $22 to $24. And set my entries and stuff, and it was just a little too unstable at launch, and then gave it a couple of days and bought in. So I made that traditional play, right? And then now it's just been off to the races, and I've exited my Corsair position since. But when Corsair hit 50, I was like, yeah, there's no way this is where you take the profit.
Yeah,
but you're just going to keep seeing that, is how I see it. And I mean, for me, December is, I've jokingly referred to it in Discord as dog shit December, because there's so many companies that in any other time frame I would laugh at for going IPO. Like, they're just doomed to fail. DoorDash is a great one that, in any other time, Roblox would not be IPOing. They've got great revenue, but, they've got some legal issues going on and all this stuff. December, you're seeing a glut of these wish.coms. Like, I don't play Chinese stocks. I'll never play Chinese stocks. But it's all, if I put my 2019 mentality in play, or my 2016, these are all terrible ideas. But 2020,
it's
bananas, right? It's not just me, it's bananas.
Yeah, no sooner are you saying that than Reuters headline, its newest article, Junk Bombs enjoy stellar November. Riskiest debt performance.
Oh my god!
Riskiest debt outperforms entire market. Like,
it's like that guy I had that I just had an issue with, because he said he was up 100%. Well, here's the thing: if you, with the way he structured, he's like, if I lose 100% and I'm up 260%, I'm still up 160%. That's not how math works, but
I was about to say.
It's 2020. We don't need math.
Where we're going, we don't need math.
The funny thing is that, like, for all these SPAC and IPOs, like, I think it will come to somewhat of a crashing halt, because people are just going to run out of money. Like, the people who are getting goaded into holding the bag are these retail investors that are just, right now they're enjoying the luxury of, the free Trump bucks, or previously the Trump bucks. It's soon to be the Biden bucks, but
or you Trudeau fans, you got your Trudeau dollars too. Don't you Canadians think that you're getting away with it?
Hey, that's taxed.
Trudeau
okay?
tendies.
And apparently they're entertaining a possible higher capital gains tax, which is absolutely stupid. But yeah, I think it's going to stop there. But in terms of playing them, like, I think that the safest play was probably how my firm had their day trading with like IPOs, not specifically SPACs, but like specifically IPOs. And Exile kind of mentioned this too, and I had a video out on it, but I wasn't satisfied with it, so I just kind of axed it. But the gist of it was basically, Alibaba is the greatest example. There was a guy who used to be a world poker star at my office who played this, and he kept psyching himself up, saying like, "Yeah, I'm going to take 100,000 shares. It's going to be great. I'm going to make, my year, make my year on just this one play or whatever." He ended up only taking 10,000. He made 10,000, but he was just kind of meh. But the play was basically, you have to assess an IPO from the point of view of hype. How hyped is this IPO? How popular is it going to be? All that sort of thing, right? And Alibaba, like, I don't think there was an investor out there on Wall Street that didn't know who Alibaba was. So once that's established, you basically, like, it's easy. You and this is an order type thing, so people may fall asleep on this, but it's an order type where you can throw it out before the market even opens, before the IPO even starts trading. And what it does is basically it says, hey, when you guys open, I don't care what the price is, but just give me what is available currently right there and then, right? And
so market on open?
Yeah. And people ignore
Give me-
this, but like, you know, what did the Corsair open at, like what, 18 or something like that? What if I told you could have got that for like probably $16, or I think it was like $16.95 was what I saw on the opening day. What if I told you could have got that for $16.95? People would be like, oh shit, how do you do it? And then when I explain it, they just don't care anymore, and they just kind of like, yeah, whatever, right? But for those of you guys who are listening who actually do want to know, be aware of it, it's called the market on open. And what it does is it sends an order to the market maker there who says, okay, I got this amount of shares to fill. Who's selling this right now? Can I get an average price? Typically, that market maker is in there with you, and he or she is not going to print themselves out of the money for when that opening cross happens. So typically you will get these good prices when stocks open, and it won't make sense to most people because, Corsair's at 18, 19 or whatever, and then suddenly $16.95 and you're filled.
Yeah.
And they're like, what the hell? What happened? How is that possible? Blah, blah. It's possible because if you understand market mechanics, that's how it works. But typically that's how I used to play IPOs. Nowadays, I have to be very, very careful about how I do that because sometimes you might get something like the Snowflake IPO where they keep hyping it and they keep overhyping it. And then they just say, well, a bunch of retail investors are going to come in, so we're just going to push this up even further. What happened? Yes, you got a fill at a better than market price, but we tanked way below that. You would have had to got out in and out like almost in an instant. And, typically most of these market makers they do what's called collecting inventory, so they don't care whether they're holding some of the bag on that as long as they get a good price. But you as a retail investor without an institutional edge, it's quite a heavy bag to hold. So
yeah,
it's like that's just one of the few ways to play it. Like it depends. Like for me, Corsair would have been like a buy and hold forever situation because I love their products. Like my computer right now that I have is mostly Corsair parts. I got the power supply, I got the RAM, and the case as well.
Fanboy.
Hey, I didn't know. I unknowingly, I just assembled it. Okay, I just randomly picked it on PC Parts Picker. Okay.
I'm right there with you. I love Corsair products.
But I don't know. Like there are some things I'm willing to hold out of the gates. Some things I'm not. But for the most part, the old day trader in me is just like I don't feel comfortable about holding certain IPOs past like that opening cross. And
yeah, I think that's a great topic for a future podcast. Is the mentality? So I started day trading. My first two genres of trading effectively were day trader and Forex guy, and learned those lessons the hard way. Did okay towards the end of it, but yeah.
Did you blow up an account?
There's still that little bit of mentality because that's how it's like when you're a child, right? That's how your early memories are formed and stuff. And it was the same for me in trading. Was like I still get that a little bit to this day when I'm looking at these really potentially lucrative plays, and it's sort of like, okay, but what does it look like in 5 years? It's sort of like I've effectively got to cock block myself on my trading platform to be like, okay, but there's the Corsairs where I have to take that position, and then also when it blows up to 50, I have to go, all right, we're done. This ride is getting ridiculous.
Yeah. But I think if you're still doing that legwork that used to be the standard, like if you're going to IPO, you read through everything, right? Anything you can get your hands on with the company, you read through it. I think the Palantirs and the Corsairs and the what's the one that's coming up? Affirm. I think if you read all of these and actually have an understanding of who's behind it, what's their track record, what is the business actually looking to do? Are they looking to win on the hype, or are they here for the long haul? Are they here for 15, 10, 20, 30 years, whatever, right? Like, I think if you're doing that due diligence that you've always done, it makes it so that you're not necessarily cock blocking yourself. You're actually stopping yourself from causing these massive mistakes. But
tempering that excitement.
Yeah, I mean, like there's obviously a lot of excitement, but you already start to see some of the shininess fading, and EV I think has been the big telling sector for that. And I know we're going to transition to SPACs here shortly.
That's a good
which is great.
segue.
Yeah, this is a perfect segue for it, where the EV market, guys, when we started with Nikola, it was up through the roof, and people were like, "This is insane! This is awesome! This is the way it's going to be." And then we had what was next? We had Helion, right?
Fisker.
And Helion did its
Helion.
Helion did its thing, and it went up. And then we had Fisker, and it was like, well, it went up kind of. But
There, Workhorse and Lordstown as well.
Workhorse, like all of these EVs, we went from this monumental rise, followed by that monumental fall, and all of a sudden, people are starting to realize, none of these have, well, product or a lasting business strategy, right? And it's like, well, geez, does this mean that day traders have an opportunity? Absolutely.
Yeah.
But
It's such a 2020 play.
Oh, it totally is a 2020 play. But let me go through my spiel so we know where we are with SPACs, just for everybody who's new to SPACs and with all these shiny bags that we got. So 2020 has seen more SPACs than any other year. It's been long associated with a reverse merger performed by overseas companies as a way of kind of expediting like a listing on an exchange without the full rigors of Sarbanes-Oxley. So that's really the difference. This year, we've had 160 SPACs, mostly U.S. $60 billion was raised in 2020 versus $10 billion in 2015. So you can see the popularity has really grown. As I mentioned before, it's largely U.S.-based because regulators and other companies understand the difficulties. SPACs underperform the S&P in 3, 6, and 12-month periods after the merger. A majority of SPAC mergers trade below their $10 IPO price. So eventually, it kind of peters out. But go ahead on your EV rant. I just wanted to kind of level set with everybody before we got into it.
Well, it was less about EV specifically and more about the fact that these SPACs, guys, we've got a new SEC coming in. We've got a whole new Treasury coming in. We've got people that want to change the rules to go after the big bad man, and that means that they're going to want oversight. They're going to want more details. The heyday of these SPACs getting away with giving us no credible information anyway before these things hit the market, I think those days are going to come to an end very quickly. I think over the next year, for us to start to see some serious requirements increased on SPACs is going to be a thing. Those short sellers that we were talking about that are out there, the Muddy Waters, the Wolfpack, they've been decrying the SPACs for as long and as loud as they possibly can, because if you're looking to protect the investor in any way, these things are a nightmare. An absolute nightmare.
Yeah, you're entirely reliant on the management team behind the special purpose acquisition company, right? So you've got no financial history to base your judgment off. So you've got to look at the management, and if you can't divine some reason there, it's fraught with danger. There be monsters in SPACs. I mean, look at China Hustle. So China Hustle was what, 2015 or 2016, I think?
Through till
it was
now.
a while ago.
Yeah, through till now.
Yeah. I mean, the movie release was then, and then what's changed? Nothing. We've got double the amount of SPACs year on year. It's crazy.
Anybody around for Luckin Coffee earlier this year?
Oh, God.
No,
Totally
I mean,
correct.
all jokes aside, but now, today, if you're a new day trader listening to this podcast and you don't know what we're talking about, go look up Luckin Coffee. It was a China hustle through and through. Oh, wait, they were being fraudulent with their numbers because there's no oversight and the Chinese government's not going to hold them accountable in any way for defrauding the U.S. of hundreds of millions of dollars? Oh, I'm shocked. Yeah. I wish somebody had told, every short company ever. Okay, cool.
I mean, you've got even sort of as an extension of SPACs, you've got, I can't remember the exact number. I think it's 400, somewhere between 400 and 500 Chinese companies listed in the U.S. How much fraud do you think is there going to be there? It's how many clean Chinese? Alibaba. Alibaba's the heavyweight name in that space, right? I don't have the most positive outlook on Jack Ma as a historically terrible person, but and as a reformed short seller, I generally align with guys like Carson Block in my sentiments. But you look at, this is a guy that just took Alipay and signed it over to his own name, took it out of the business, and then a month later decided to tell outside shareholders and the board that, oh yeah, I don't feel it's legal and proper for you guys to own a share of Alipay, so you don't anymore. I made that decision for you. Thanks. And that's what became the Ant Financial Group, right? So this is not a new thing. That was I want to say that was 2012 or 2013. We're still seeing this behavior. So we're also looking at I think, was it Wednesday we're looking at for the House to start talking about changing the rules for particularly with a view to Chinese.
Wednesday specific to China, not SPACs, but specifically to Chinese companies on the platform. So that would be SPACs or otherwise, right? So YumC would be in that, but it's not. YumC went through the proper steps, but it's still a China stock, so it's going to have that kind of criticism around it for sure.
But just to baseline it for everybody. So for Chinese companies, there's 4 things that you really need to understand. Number 1, they are not audited like a U.S. company is. They are audited by overseas auditors, but So the second thing is that you don't actually own the company. You own it through a VIE. And I'm sure I could go through that, but the point is you don't have direct ownership. Third, it is not illegal for a foreign investor to be defrauded by a Chinese company. There's no real cooperation between the regulators in China and the SEC. So you literally get weird things as per the Wolfpack's letter to the SEC. You literally will get weird things like they will claim a certain amount of revenue in China while submitting a certain amount of revenue for the SEC. And yes, this shit does happen. So it's kind of like a Darwin's grab bag of what dog shit are you going to get today?
The IDE, is that also, does ADRs actually fall in the same category or not?
No, VIE is a specific vehicle inside of a listing.
Oh.
It's how they hold ownership in China because China does not allow foreign investors to own anything. Tesla is the only company that's been even allowed to own their own factory there. Sometimes they don't even allow Chinese companies to own their own land and industrial factories and property inside China. So it's just kind of how they work.
Yeah, fraught with danger. But I mean, I guess how I see that journey, I mean, SPACs have been around since I want to say the late 80s. But they really only sort of hit their stride in the 90s, I think, before my time in investing and trading. But
I mean, right before the last ridiculous boom the market had? Go figure. Okay, cool.
Exactly, right? That's the sort of parallels I have to draw is you've got, it almost feels like this perfect storm is starting to form, right?
It's a shit storm, by the way, folks, but yeah.
Yeah, it's just fraught with danger of you've got a capital flight to China. You've got Chinese stocks just taken. Last I heard, it was up to about $1.5 trillion out of the U.S. capital markets by way of these reverse mergers, the capital raises they're doing on U.S. soil.
The
but then you've got no accountability.
Gold standards out the window, like unregulated currency as the new standard for the financial world. Great, cool.
Yeah, that's always a good time. So it's just, I mean, do we see SPACs? I mean, so now you're sort of starting to see these China hustles come home, right? Like they're now America hustles where you've got the Nikolas and I guess a lot of the EV ones are...
Oh, Nikola.
The one, fuck Nikola. But it's too easy. You've got, I mean, also you've got from the last crisis, the birth of a new attitude from the big four, Ernst Young and Deloitte and those guys, where it's like, oh, no, we're not. Basically, you can use our brand name when things are good. So, we're going to have a listing, and so Deloitte are going to be involved. Oh, Deloitte, that's a prestigious name. But then when things go wrong, or when the auditing falls apart, or there's an issue, it's no, you don't. It's not Deloitte. It's Deloitte China, or it's Deloitte Europe. So it's just shifting this liability. So same deal. When times are good, it's great, and then something goes wrong, and they've all got Teflon shoulders all of a sudden. So, but now that's come home to the U.S. markets. It's to me, SPACs, they need reining in a huge way. I have, the minute I see a SPAC, I've been so poisoned by the performance of SPACs in particularly the last 12 months, that as soon as I see SPAC, I immediately get that bad taste in my mouth, that negative perception. This is just raking the capital from the retail markets. So there has been a few good ones, but
very few.
And their performance is generally terrible, like Martini said. So I don't know. Does everyone else have that expectation that a SPAC listing is going to be a dog shit company?
I mean, I played Fisker and I went green on it, but again, looking at its performance since, it hasn't done anything.
What, for 4 days?
Well, that's what I'm getting
4
at.
days.
If you're playing for me, the thought process on SPACs is this: if you're playing the people are chasing the shiny game, then I don't mind SPACs day one for the first 15 minutes. But take what you can get from it, and then that's it. And I mean that's my own personal assessment of SPACs is first 15 minutes of the ticker change. That's what you've got to take your gains, however big or small they may be. Because past that point, it could all just disappear. Like shifting sands gone from underneath you.
So they're effectively day tradable rather than investable, right?
Right. I don't see like DraftKings. Okay, DraftKings. We can talk about a 5-year on DraftKings. I still think DraftKings comes down over the next 5 years because they've got nothing that's proprietary in that industry. They're a big name right now, but already we see companies like Caesars and MGM going balls deep into online gambling. Like DraftKings days are numbered. I don't think that I've seen a solid 5-10 year play on a SPAC. And I mean, Virgin Galactic, I guess, can be argued, but we won't know that for the next 10 years, right? Is space an industry where, Virgin will go up? Yeah, I think Virgin 10 years from now will probably be $80. But that being said, still, it's an oddity. That's one out of hundreds and hundreds and hundreds of pieces of crap.
Yeah.
So, I mean, does it leave a bad taste in my mouth if I'm a 5 to 10 year investor? Sure. If I'm a day trader, the fact that more and more and more of these are lined up, I mean, it would make me a little bit giddy, I think, of the number of people when I'm streaming during the day or when Martini's streaming, and you hear them call it these things, and you open them up, and it's like, well, what's their product? What do they sell? This person does not have a product or a service. They are essentially just a giant pool of money that's waiting to buy up somebody else's thing. Like, ugh.
And they've only got 2 years to do it, typically, right? Yep. So that usually, I mean, by the end of the first year, they've got their eyes on something, and they're in the feeling each other out stage, and they're getting ready for the big day type thing, like we recently saw with Fisker. But
I almost like that play better. Of like, let's find the existing SPAC companies that are on the market that have yet to name who they're going to pair with, and let's just take those for a year or 2 years and hold those long. Those are the better long play, right? Because that they've got a deadline and they've got to hit it.
I mean, it's almost a private equity play, right? You're just
Oh, absolutely. That's exactly what it is.
But available to a retail trader.
The problem is, that's the problem. Look, okay, let me explain something about the private market. There's a reason that the private market is relegated to accredited investors only. And for those of you listening, an accredited investor is someone who makes $200,000 or I think it's 400,000 combined with a spouse, or has $1 million liquid exclusive of their house. And that makes you eligible to trade in the private market. And the reason they do this is because the private market, because they don't disclose a lot, what's crazy is when I tell people that the private market, they don't open their books unless it's for like a big fund, right? And they're not required to they're not required to follow GAAP. They're not required to follow anything. They could show you books in any interpretation that they want. And so that doesn't happen with a SPAC, but it's somewhere in between that and an IPO, right? And an IPO takes a long time and has a lot of eyes on it, and more eyes are on something, somebody else points it out. That's the main reason why you see so many people in the Discord right now. Look at that, like 15, because there's tons of people looking at the same thing, and somebody will catch something, right? And then you have that process being shoved onto retail traders that, I'm sorry, but somebody came into my chat, brought up Nikola, and said it's a Tesla killer. And within 15 minutes, I already knew it was a piece of shit. I literally had somebody arguing with me that it was a good price at $90. Okay, a car company that has no product is bigger than the market cap of fucking Fiat, GM, and Ford all rolled into one.
But they had Trevor Milton, who... What a visionary, right?
Oh,
the
yeah.
man's in motion. You can't stop him.
Yeah, he's winning that game for sure.
And I can't convince people of the dog shit fucking pile they're being sold. And ultimately what I think has got to happen before this thing, one of our questions is the trend likely to continue? And I think this thing continues until we get a moment where they get burned. Yeah. A fucking dog shit apocalypse where that fucking Roomba just rides right over it and everyone's got shit on their face. Okay. That's the only way, because no one sees underperformance as a bad thing, and they can't extrapolate that shit out for a year or two to be burned just like I have over multiple years. I mean, I'm sure people from the .com burst can tell us lessons that we continue to repeat over and over. I don't know.
Yeah.
And it's exacerbated too, right? It's exacerbated because most of that negative performance, that underperformance, everybody's just gonna, and everybody's been doing this, whether you were on the Netflix call, the Nike call, pick your company. Head on the call, listen to the executives with their shit-eating grins going, whether they would have done well or not doesn't matter, because everybody can just go, COVID. We did bad because COVID. We did bad because COVID. COVID. It's COVID's fault. We did bad because COVID. Yeah. Not because we're Macy's and nobody's coming into the store anyway. No, it's because COVID. This cause COVID mentality is just going to give people the excuse until there's no more COVID. And I think that's when the other shoe drops, right? That's when the apocalypse hits of, oh, wait, people were doing bad not because of COVID, but because they are bad companies? Okay.
Yeah, it does almost make it excusable. It's kind of like the old adage of privatize the gains and socialize the losses. It's sort of like in 2020, it gained because it's 2020 and everyone's looking for a place to put money and the market's on fire. And but then also when a company turns around and loses a pile of cash or has a terrible quarter, it's very easy just to dump that blame on, hey, there's a pandemic, right? I think there's going to be a lot of postmortems done on dog shit companies and stocks in 2021. But ultimately, the question I've got is are they going to equip the SEC to do their job better? Because they're, clearly overwhelmed with, that they haven't got the manpower or the time to go through these companies, like in the level of detail. And also SPACs basically streamline that process through the SEC in a compliance sense. So are we going to see that? Are we going to, do we see that in 2021 where the bad taste, the hangover that's left from the 2020 SPAC party, is that going to kind of put the kibosh on this fervent growth that we've seen.
I think
it
regardless
has
of
to.
how the next 6 months, 8 months goes, with this year being the year of the IPO and the SPAC, I think 2022 is going to be the year of the bankruptcy. I think that's where the everybody's got to pay the piper. And 2021, people are still going to get through it because we're not going to know till June, right? Let's be realistic, folks. If you're in North
talking
America,
like corporate level bankruptcies?
Yeah. I'm talking about like not we did badly in sales and we are going to try to weather the storm. I'm talking like bankruptcies. Like
Okay, so 7 or 14?
what?
Like dead? Like a liquidation
dead.
or a
We're dead.
reorganization?
Yeah, no, we're dead, Jim.
Like we're dead, Jim.
Yeah.
Courthouse steps. Here's all your shit. Throw it outside. We're liquidating, folks.
Here are the keys. Bye. We're like later. We're done.
I'll be in the Bahamas.
We're done. You know how quick Enron packed up shop? Like, the key was left on the front stoop, and by the time the SEC showed up to put cuffs on people, everybody had dispersed like cockroaches, right? That's what I think 2022 is going to look like. Everybody that tried to play off every negative financial result over the last year and a half is going to be standing there going, well, we might have exaggerated the COVID impact. It might have actually been our business model's complete dog shit. Oh, really? I think there's going to be a string of bankruptcies. Macy's is diluting the world at the moment. It's absolutely got the world eating this. It's like a bad acid trip. And they're not the only ones in the retail sector. There is a long list of retailers that should not be in existence that are currently in existence. You've got MREITs that are over leveraged through the teeth. And you go and check on some of these strip malls and there's like 30% occupancy at the moment or 20% occupancy. And they're living on, they're feeding people this pipe dream of that's just because COVID. Don't worry. Afterwards, these companies will come back to the malls because people will come back to the malls. No.
But here's the thing.
I'm not even going to entertain it. I'm not going to tiptoe around it. You're nuts. You're absolutely insane if you think the shopping mall is making a comeback in 2022. No way.
Yep. Sears and JCPenney, they're ready to make a comeback any day now.
Here's the thing, though. What I think nobody's really thinking about, at least on a retail segment, is the Federal Reserve owns these bonds. Typically, when you go into a bankruptcy, it's because the creditors sue for better liquidate. You know what I mean? And that puts you into the bankruptcy. But if the Federal Reserve owns these bonds, then what do? What forces them to have that moment? Unless it's a private bondholder, but it's not. It's the Federal Reserve. I mean, just go out there. You can go look at the list that they bought.
And then look at the currency.
I think Yellen being the pick, I think the Democrats having rattled the saber against business bailouts so hard that businesses should not have been bailed out. How dare they bail out big business like this? The checks need to go directly to the people, not to the businesses. I cannot foresee heading into 2022, short of the Republicans taking the House in the States, I do not foresee a way in which the Democrats can take any tone other than we are not going to bail everybody out. There is no too big to fail this time. Because last time it was just an executive payday when we did that, so we're not doing it.
I think you have to look at the gravity of like what a potential failure could be as well. I mean, I've made my position known on 2023 being the date that without a catalyst, I think that's when all the chickens come home to roost and we have a big one, right? A huge economic event for the negative side. But you have to look at, I mean, the bond market is I took a fairly deep dive into that not too long ago, just a few weeks ago, and it's horrifying.
Yeah.
It's absolutely terrifying. But then also you've got to look at your derivatives and your currency as well.
I was going to say the global currencies is going to be a big deal. No deal Brexit's coming, guys. Like that. If you don't think that rocks the global financial sectors, you're nuts. Yeah. It completely reshapes.
It all goes through London.
It reshapes everything. And I know the U.S. is so fixated on the U.S., but you got to pull back for a second here and realize that you've got Australia's finances under attack by China. Whether people want that publicly announced or not, that's the reality of what's happening. That's heating up. You've got China pulling together this Asian trade deal that's got 20 of the leading economies there. You've got the EU that's falling apart at the pieces. Germany's trying to keep everything duct taped together. France is starting to eye up, peace, we're out of here. You've got the states of disparity in there of Spain and Italy and Greece that are just leeches on this thing at this point. You've got the UK not knowing up from down which part of the island belongs to who they're going to trade with, how they're going to trade with them. You've got COVID on top of it. Like as nutty as the US economy is at the moment, the global economy is about to go through a shitstorm. And I mean, people have been laughing, but more and more people are thinking, I'm a little less nutty. 2019, when I said I see Brexit gone by 2025, I could not get anybody to agree with me at the start of this year. And now for me to lob that out there, I think the EU's gone by 2025. There's a lot of people nodding their head, yes, like that's gone. It's going to be reshaped and reformatted it's gone. The German people are not going to continue to pay for Europe. That's done.
Yeah. That's it. It's and then you've got to look at the underperformers on the European stage as well, the turkeys and what's commonly referred to as the pigs, Portugal, Italy, Greece, Spain, those guys, but also the ancillary guys, the turkeys and topical given it's Thanksgiving. But yeah, it's a huge net drain. They don't have the capital that the U.S. markets have to endure that. So do you just bond it all out and hope for the best, or is there going to be a big event? And I mean that's tying it back to SPACs when we're talking about SPACs it's that sort of flight to safety thing. Like you've got market fever in 2020 and get to the race faster by using a special purpose acquisition company and get the capital while you can. That's part of what I see is it's pigs at the trough almost, right? Where it's just, hey, let's just get to the race. We need to get there faster. How can we get there faster? We'll do it with a SPAC. As a capital raising vehicle, it's almost like insulation against it. It's a hedge against things going bad in 6 months, 12 months.
What, earn your bag so that way when shit hits the fan, you have enough?
Yeah, it's like, look at this can. Let's kick it down the road. How hard can we kick it? Yeah. I don't know. Let's SPAC and see.
I mean, has anyone got a good SPAC? Like, literally, that's the one thing that keep going back to is, can I think of a good SPAC that's performed super well that I'm really impressed with?
Space.
I'm not that impressed with Space.
Sorry.
$27 a share. They don't even have a product.
I see that they don't have a product.
They can't launch until lockdown stops in New Mexico. They have no product, and this thing is run from 18 to almost 30 on no product.
No this launch. Is a good thing,
but that's just it.
That's the point.
So the point is they're there now, but Virgin has their launches lined. They're ready to go. So for me, it's like, oh well, does this go to 80? No. Does it retain?
But they're still trying to capital raise as well, aren't they?
I think they're holding.
Didn't they just come back and say we need another couple of $100 million or something?
Not that I had seen on their last earnings. Their last earnings, I didn't see anything about a capital raise, because what Bronson's been doing is selling off his Virgin Cruise Lines and Airlines stock to pay for space.
Yeah.
Which, I mean, take that for what you will. But I think Space, out of all of them, is the only one that I'm looking at going, do I think that it could hold this 30 level over 5 years? Yeah, I think it could. Out of all of them. DraftKings I see declining from where it is. I don't think it maintains its current level. The only SPAC that I can think of, and I look at the level it's at right now and go, 5 years from now, is this going to be the same place? Yeah, I think Space will still be around 35 in 5 years.
I think DraftKings might have a slight little boost back up because, and I know this is kind of late, but the return of sports. I think the people who we used to be itching to bet couldn't bet because there was just literally no events for them to bet on. And then coming into 2021, we might see a slight bump, but I don't know about after that.
Yeah, I'm talking. That's what I mean. Like over 5 years, do I see DraftKings at 60? No. No. At 30? Sure. But MGM and Caesars are already moving into this online space. DraftKings, it's great that DraftKings thinks that it's this big deal that nobody else can do what it's doing, but give your head a real shake there. MGM and Caesars have been in this game for a long time. You don't think that they weren't ready for this? Like, come on.
No, MGM was like prepping for this since 2 years ago. I remember because I played it. It was just like a random, it seemed like a nothing article, but it spiked it like 10-12% on the day. And yeah, all it was basically saying like, yeah, MGM is pursuing or continuing to pursue the thoughts of adding online gambling on sport events to their online component or the websites. This is before the virus and everything. Like they were already planning on doing it. This was before DraftKings IPO'd or anybody even knew what DraftKings was.
Yeah, I think they've got the luxury of the US gambling market being in this kind of weird spot anyway. I think the minute you see the US gambling setup moving more towards what the UK one's like, which is, to me, it's fairly inevitable. Yeah. Because look at when casinos are built and where casinos are built. Other than Vegas, it's usually like the Dayton, Ohio's, not the Beverly Hills. So they sprout up in poor areas typically, right? Yeah. Or somewhat economically depressed areas.
If you see a cash money market somewhere, guaranteed there's a 888 bet or a wee bet or something nearby, right?
But then you look at the UK gambling market. Historically, it was like when I was a kid, it was Ladbrokes and a couple of other big names like that, Coral and a few others, and then all of a sudden the gates were opened, casinos were allowed, and then all these other the Paddy Powers and the 888 bets and all these guys were just born. I think you see that in the US going forward as well.
Jesus, you were a serious gambler. I know all those names.
It's sports, but yeah,
it's a lifelong obsession. What can he say?
It is. It's damn near a passion. But I'm English. We'll bet on two flies walking up a wall. So it's just. I think you see the US go that way as well. It is, it just becomes permissible. The lobbying cash and all that stuff, and it might be a valid use for SPACs on home soil. Honestly, as you see that creeping expansion of that as a sector in the US, get to the markets faster, and if the economy takes a shit, I would definitely not rule out the rise of the next generation of gambling. Oh, we all just stick to Robinhood and use that instead.
Oh, yeah. So that way you can shut down intermittently, including today.
Don't use it. Don't want it.
I just looked up the top 10 SPACs of this year by their returns. And this is like a month ago, so stuff could have happened between then. So excuse the late information, but I thought it would be important to mention this. So the best performing SPACs, basically because they have stayed above their $10 IPO price, DKNG, Space, Virgin Galactic, Nikola, RPay, which is Repay Holdings, Vivint Smart Home, VVNT, Collier Creek Holdings, and FSR, Fisker.
Mm-hmm.
So what? We're talking about, so only out of 160, we have maybe 5 that have decided to stay above the $10 initial price. Like, that's pathetic.
And we're recording this on the day that Nikola got some fairly heavy news regarding their GM deal and are currently down 23%.
Played that. I told you, they 100% misplayed that. They weren't really caught in a rock and a hard place. And remember what I told you, Reed, about how they were basically going to go on a media blackout for the next 2-3 weeks, and no one's going to talk about them updating their file. Kramer said something about it during his interview, but I don't think anybody really watched that, right? And Sure enough, we got boosted up to almost 30. Or actually, I think we went a little above. Now we're crashing back down. But I think they misplayed it because the first initial stages were correct. They went on media blackout for anything negative and all that sort of stuff. But I think what they should have did was they should have kind of kept putting out articles saying like, the GM will likely sign this because whatever, because they can make it up, right? They don't have to follow any of the rules as what we've seen before. They could say, oh, GM deal still on the table for Nikola. They have until December 3rd to, decide and all that sort of stuff. They should have been hyping that up, but instead they did this at the last minute when they were having the same lockup and the lockup was still fresh in everybody's head. So they weren't thinking about they weren't thinking about the GM deal. They were thinking about the lockup expiring today. Mm-hmm. I honestly think if they were to, do it the other way and just say like, oh yeah, GM deal this, people will forget about the lockup. People don't have very long-term memories for things unless you burn them really badly.
Yeah.
So
seeing some pretty heavyweight names. If we're just going to talk Nikola, let's do it. I love it. Yeah. Seeing some fairly heavyweight names kicking the can down the road on their lockups, like CNH Industrial. I think they moved it to April now. But it all, for me, this is like my 2020 obsession, Nikola. And I did have a short position, which I exited on them. I timed that horrifically, honestly. But at the same time, it's just nice to see them. I despise that company with every fiber of my existence. But it all hinges on Trevor, right? It all hinges on Trevor Milton. What's he going to do with those shares? Is he going to...
Well, it's got to feel dirty to say. If there's one man I did not want holding my fate in his hands, it would be Trevor Milton.
I know, right?
I think he dumped, just suspicion right now, but I think he dumped at least a quarter, or whoever came out of the lockup today, I think they dumped at least a quarter, because right now they can't dump anymore. They're going to tank it even further. And it's like, say what you will, but the uptick will not stop them from doing this. So I think if they haven't already gotten out half by now, they're probably going to get out by the market on close order or something like that. But for the most part, I think that they're stuck. They're really stuck.
Yeah, does he believe in that business enough to hold on to his shares, or, is he just going to dump it and take the cash? I love that. It's like the finale of a soap opera.
I'm
curious. I mean, he went to grand jury. I'm not really sure what happens if you're under investigation or have a pending trial not pending trial, but a pending criminal action against you. If you can even dump the shares, or what I would love to be a fly on that wall with that lawyer saying, what is he supposed to do? But,
Yeah.
I don't know what they're supposed to do, but the fact that we even have to say the word that he has a pending criminal action, because in the filings, for those of you who may not read the filings, they disclosed in their last earnings two things, which is what they're referring to. First off, that Trevor Milton and the company had to be subpoenaed as part of a grand jury action against Trevor Milton. And also in the filings, a quarter of the PIPE investors actually decided to extend their lockup to April. So the only people that can sell are the founders, which are the current CEO and Trevor Milton. So that's what they're referring to.
Yep. I think we have to have a Nikola episode where we just...
I think it really is a whole episode to itself. It is. It's a whole episode to itself.
I can only say this because it's happening on the day, but like in the morning, I saw it was funny because like we were just defending that 27 and there was just some spoofing size on there. But the moment we broke that, oh my God, like just every dollar level started lighting up with like orders. And it's just like, oh crap, it's coming. Okay, get out of the way. Next one, let's double it. And they doubled and they doubled and they doubled. And right now they're spoofing about just under 400,000 shares at $20. You know how much it was at 21? It was only about 120,000 and then it jumped up to about 200,000 when market opened. And as we approached it, we kept growing very, very slowly, incrementally, until we broke it. Then we broke it, and now it's like, okay, well, shit. Okay, post at 20. Everybody post at 20. and like, yeah, we just jumped up as soon as I said that, and that, 200,000 of that just disappeared off that $20 level. So it's quite an interesting venture when you can see stuff like this. But like, oh, yep, now it just came back. So.
Well, guys, we're going to have to end it there because we're kind of going long. But I think what we need to do is do an entire episode on Nikola, because it's obviously a sore point with all of us. But thank you guys for listening. If you're on the podcast, please subscribe to us. If you are on YouTube, like and subscribe. Yes, I am that person. But no, really, please share it out. And we'll see you guys in the next one.
Later.
Bye, guys.
See ya.